Understanding Philippine taxes. Taxes are a fundamental aspect of any nation's economy, and the Philippines is no exception. They play a crucial role in the development and sustainability of the country. Taxes are the lifeblood of a nation. They are essential for funding the various services and infrastructure that citizens rely on daily. Without taxes, the government would not be able to provide the necessary public services that ensure the well-being and progress of society. They fund essential services like healthcare, education, and infrastructure. For instance, public hospitals and clinics are maintained through tax revenues, ensuring that healthcare is accessible to all. Schools and educational institutions benefit from these funds, providing quality education to the youth. Infrastructure projects, such as roads, bridges, and public transportation systems, are also financed by taxes, facilitating better connectivity and economic growth. In the Philippines, understanding the tax system is crucial for both individuals and businesses. It is important to be aware of the various tax obligations and how they impact financial planning and compliance. For business owners, proper tax management can mean the difference between success and failure, as it affects profitability and legal standing. This guide provides a clear and concise overview of Philippine taxation. It aims to demystify the complexities of the tax system, making it easier for everyone to understand their responsibilities and benefits. Whether you are a new taxpayer or someone looking to refresh your knowledge, this guide will be an invaluable resource. We will explore the different types of taxes, how they are calculated, and the specific forms required for each type. From income tax to value-added tax, VAT, and from corporate tax to excise tax, each category has its own set of rules and regulations. Understanding these can help you avoid penalties and make informed financial decisions, and when they are due. Timely payment of taxes is crucial to avoid fines and interest charges. Knowing the deadlines for filing and payment can help you stay compliant and avoid unnecessary stress. Marking these dates on your calendar and setting reminders can be a practical way to ensure you never miss a deadline. Whether you are a resident or a business owner, this information will equip you with the knowledge to navigate the Philippine tax landscape. Being well informed about your tax obligations not only helps in legal compliance but also in financial planning and management. With the right knowledge, you can take advantage of tax incentives and deductions, ultimately benefiting your financial health and contributing to the nation's development. The structure of Philippine taxation. The Philippine tax system is primarily governed by the National Internal Revenue Code, or NIRC. The Bureau of Internal Revenue, or BIR, is the government agency responsible for implementing and enforcing tax laws. The NIRC outlines various taxes, including income tax, value-added tax, excise tax, and others. Understanding the roles of the NIRC and BIR is fundamental to grasping the overall tax structure. National taxes. Income tax. Income tax is a key source of revenue for the Philippine government. It is levied on the income earned by individuals and corporations. The Philippine income tax system follows a progressive scheme for individuals, meaning the tax rate increases as the income bracket rises. This ensures a fairer distribution of the tax burden. Corporations, on the other hand, are subject to a flat income tax rate. National taxes. Value-added tax, or VAT. Value-added tax is a consumption tax imposed on goods and services. In the Philippines, the standard VAT rate is 12%. This means that when you purchase goods or services, 12% of the price is added as VAT. VAT is also applied to imported goods. Businesses registered with the BIR are required to collect VAT and remit it to the government. National taxes include excise tax and other levies. Excise taxes are levied on specific goods, often considered luxury items or those with potential health risks. Products like alcohol, tobacco, and petroleum are subject to excise taxes. The rates for excise taxes are typically higher than VAT. In addition to income VAT and excise taxes, the Philippines also levies other national taxes, including estate tax, donor's tax, and documentary stamp tax. Local taxes encompass real property and business taxes. Aside from national taxes, local government units, or LGUs, also impose their own taxes. These include real property tax and business tax. Real property tax is an annual tax based on the assessed value of land and buildings. Business tax, on the other hand, is imposed on businesses operating within the LGU's jurisdiction. The rates for business tax vary depending on the type and size of the business. Filing and payment procedures for taxes are essential to compliance. Every taxpayer, whether an individual or a business, must understand these procedures to avoid complications. Compliance with tax obligations is crucial in the Philippines. It ensures that the government has the necessary funds to provide public services and infrastructure. This compliance is not just a legal requirement, but also a civic duty. This involves filing the correct tax forms and making payments by the specified deadlines. Missing these deadlines can lead to significant issues, including fines and interest on unpaid taxes. Therefore, it's important to keep track of all relevant dates and ensure timely submission. The Bureau of Internal Revenue, or BIR, provides various forms for different tax types. These forms are available on their official website and can be downloaded for free. The BIR also offers guidance on how to fill out these forms correctly. For instance, individuals file income tax returns using BIR Form 1700 or 1701, while corporations use BIR Form 1702. Each form has specific instructions and requirements that must be followed to ensure accuracy. Failure to file and pay taxes on time can result in penalties and legal consequences. These penalties can be severe and may include additional fines, interest charges, and even legal action. It's crucial to stay informed and proactive in managing your tax responsibilities. To make the process easier, the BIR has introduced online filing systems and helplines. These resources are designed to assist taxpayers in understanding their obligations and completing their filings accurately. Consulting with a tax professional can also provide valuable insights and help avoid common pitfalls. Additionally, attending tax seminars and workshops can be beneficial. These events often provide updates on the latest tax laws and regulations, ensuring that taxpayers are well informed. The BIR frequently conducts such seminars to educate the public. Staying organized is key to successful tax filing. Keep all relevant documents in one place and maintain a checklist to ensure that nothing is overlooked. Regularly reviewing your tax situation can help you stay on top of your obligations and avoid last-minute stress. Proper filing and payment of taxes can also lead to benefits such as tax refunds. By adhering to the procedures and deadlines, you can ensure a smooth and hassle-free tax experience. Remember, being diligent and proactive in your tax responsibilities is not just about compliance. It's about contributing to the nation's growth and development. Recent developments in Philippine tax laws. The Philippine tax system is constantly evolving to adapt to the changing economic landscape. In recent years, there have been significant reforms aimed at simplifying the tax system and making it more equitable. These reforms are primarily embodied in the Tax Reform for Acceleration and Inclusion, or TRAIN law, and the Corporate Recovery and Tax Incentives for Enterprises, known as the CREATE Act. The TRAIN law reshaping income taxation. The TRAIN law, implemented in 2018, brought about substantial changes to the income tax system. This landmark legislation, officially known as the Tax Reform for Acceleration and Inclusion Law, was designed to simplify the tax code and make it more equitable for all Filipinos. One of the key features of the TRAIN law is the reduction of personal income tax rates for most income earners. This means that individuals earning less than 250,000 pesos annually are now exempt from paying income tax, providing significant relief to low and middle income earners. This move aims to increase the disposable income of Filipinos, boosting consumer spending and stimulating economic growth. With more money in their pockets, families can afford better education, health care, and other essential services, thereby improving their overall quality of life. The TRAIN law also adjusted the tax brackets to reflect inflation and provide relief to taxpayers. By updating these brackets, the government ensures that the tax system remains fair and that taxpayers are not unduly burdened by outdated thresholds. This adjustment helps to maintain the purchasing power of Filipinos and supports a more balanced economic environment. Additionally, the TRAIN law introduced measures to broaden the tax base and improve tax compliance. This includes higher taxes on luxury goods and sugary beverages, which not only generate additional revenue for the government, but also promote healthier lifestyle choices among citizens. The revenue generated from these reforms is intended to fund vital infrastructure projects, such as roads, bridges, and public transportation systems, which are crucial for the country's development. By investing in infrastructure, the government aims to create more jobs, enhance connectivity, and foster long-term economic growth. Ultimately, the train law represents a comprehensive effort to modernize the Philippine tax system, making it more efficient and just. The benefits of this reform extend beyond mere tax relief, as it seeks to uplift the lives of Filipinos through better public services and a stronger economy. The CREATE Act boosting business competitiveness. The CREATE Act, enacted in 2021, focuses on improving the business environment and attracting investments. It reduces the corporate income tax rate, making the Philippines more competitive in the region. The CREATE Act also streamlines fiscal incentives, making them more performance-based and transparent. These changes aim to encourage businesses to invest more, create jobs, and contribute to economic development. Seeking professional tax advice. Navigating the complexities of the Philippine tax system can be challenging. While this guide provides a general overview, seeking professional tax advice is crucial for personalized guidance. A qualified tax consultant can provide tailored advice based on your specific circumstances, ensuring you meet your tax obligations effectively and efficiently. Remember, staying informed and compliant is vital for both individuals and businesses in the Philippines.